Okay, welcome to the UK House Price Index according to Zoopla for the month just past, July 2024. Now, the headline executive summary, according to Zoopla's figures, is the housing market continues to adjust to 4% plus mortgage rates with increased market activity rather than faster pace growth. House prices are broadly flat, according to Zoopla, over the last 12 months, but prices are higher across all regions of the countries of the UK over the first half of 2024. Now, UK house prices in particular are on track to be up to 2% higher over 2024 itself. Now, this is all according to Zoopla. Outside of the UK House Price Index with the Office of National Statistics, I think Zoopla has got just as much accurate real-time data to tell exactly what's happening on the ground right now. The Office of National Statistics obviously register historic information, which could be 6 months or 9 months from the time it actually was sold. So it takes a wee bit longer for that to get in the register. And it could be slightly out of date. So Zoopla is a great complementary indicator and statistical platform to assess real-time information, which they gather all that data on their website itself. So it's a great insight into where the market is right now and right across the UK and in particularly in your area. Because predominantly it just we'll go over the main statistics towards the end and we'll talk about the regional areas in terms of Scotland, Wales and right across England itself, and also incorporating London overall. So if you're in any one of these regions, let's talk about this and go through it. So according to Zoopla then again, the supply of homes for sale continues to grow and is 16% higher than a year ago. The average estate agent now has 33 homes for sale. More supply and choice is supporting sales growth, but will also keep price inflation on properties in check itself. In other words, boom is well and truly over. Buyers are paying a greater proportion of their asking price, 96.8%, which has rebounded the most in London and the South East itself. So let's take a look at these statistics overall, just headline again, and I'll bring these up so you can see them. So here we are right here. So you can, as you can see, the annual house price inflation according to Zoopla right across the UK is 0.1%, but positive. That's a good sign in here. And then we go into percentage of asking price achieved, 96.8%. So just to give you an insight into that, 96.8%, this is incorporating England as well. England don't work on home reports. They work on the highest value possible, and then they work their way back. So that's why it's 96.8%, whereas we work from home reports, which is the base, and we try and work our way up. So because we're almost a tenth of the housing population of the England itself, England tends to skew this, hence the reason why you see 96.8% is the achieved price in the UK in average according to Zoopla. And the stock of homes for sale, as you can see there, has gone up plus 16% year on year for every estate agent to 33 properties on average in each agency branch itself. So let's look at that in graph form overall, where we are, housing market activity running above pre-pandemic levels from 2017 to 2019. Here we are right here. So as we can see, housing market most balanced in 5 years. Definitely, according to Zoopla, the housing market is the most balanced in the last 5 in the 5 years passing. The housing market continues to adjust to the 4% plus mortgage rates with positive signs of increased activity. More sellers continue to list homes for sale. More sales are being agreed, and buyers are paying a greater proportion of the asking price as confidence actually improves. UK house prices are rising slowly across all regions and countries over the UK over the first half of 2024. That's from January to June, reversing the price falls recorded over 2023, and market activity will continue to improve, but prices will be kept in check by a greater supply of affordability constraints. So here we are here. So according to Zoopla, UK house price inflation statistics we've got here overall. You can see there buyer demand is up 20%. That's because there's more supply, really. Number of sales agreed at 22%, again, because there's more supply. Flow of new supply, you can see that there, 9%. And stock of homes for sale has actually increased by 12%. That's comparing it against the pre-pandemic levels from 2017 to 2019 overall. So let's talk about house price inflation. They're still negative in the south. So house prices have edged 0.1% overall, plus higher over the last 12 months, increasing by just £310 to an average of, right across the UK, according to Zoopla, £265,600. Annual house price inflation ranges between minus 1.2% in the east of England to plus 3.9% in Northern Ireland. House prices have increased across all regions and countries of the UK in the first half of 2024, and Zoopla expects house prices to continue to increase slowly over the second half of 2024 itself. This means that the annual rate of UK house price inflation will increase towards plus 2% by the end of the year as price decreases over the second half of 2023 fall out of the annual house price growth calculation, because remember, it's over the 12-month period. So the 2023 will fall out of that equation and it will incorporate into the 2024 overall, with the first half and the second half of 2024, which will be positive 2% according to Zoopla. Now, Zoopla's got a real good handle on this, because remember, it's real-time information, and a lot of their stock is actually sold. About 75% of the stock on Zoopla is actually sold right now, and this will end up concluding towards probably the next 5 or 6 months. So that's real-time data on the ledger itself, and they can accurately predict then, because they've sold at that sort of price point, that it will be plus 2% by the end of the year, which is roughly what I predicted at the beginning of the year for Fife itself, because that's my region. But for everybody else's region, we'll talk about that towards the end. So the housing market really requires a 12 to 24-month window where incomes rise faster than house prices to help offset and reset affordability. Incomes are set to rise 4.5% in 2024, and Zoopla would expect incomes to rise faster than house prices in 2025. Let's have a look at the statistics overall for house price inflation across the UK by area. So here we are right here, as you can see. So now you can see that in the second half of 2023, see how it's all negative below the black? All the regions are negative, except for Scotland. You can see that. So Scotland's always fared quite well. UK was negative in 2023. First half of 2024, you can see it's all positive signs of increases. So when 2023 disappears, the second half, and 2024 gets added on to the second half of 2024, that's why they can accurately predict, according to Zoopla's figures, there'll be a plus 2% rise year on year when that fades out itself. Okay, supply of new homes, for example, the supply of homes for sale continue to grow overall. So what does Zoopla have to say about this then? One important feature of the housing market at present is that there are more homes for sale than at any point in the last 6 years. I'll just say that again. There's more homes for sale than at any point in the last 6 years, which means there's a lot more supply, which means there's a lot more stabilization in house prices, which means there's a lot more accurate pricing needed to be done, and also for some people that have been on the market for quite a while, maybe a revisit and a realignment of your price bracket before you first began, because of the oversupply of properties on. After all, if you've kept your house price at the same price it was maybe a year ago, if you've been on for over a year, because there's more supply come in, everybody else can see that, what your price is at, and they'll be pricing themselves at an appropriate level, probably to be more attractive to the potential buyer than yours is right now. Hence the reason they'll probably sell themselves first, and you'll still continue to sell in the market. So this is a good time to speak to your estate agent and revisit your realignment of your price point, just to double check that it is actually still at the right price and appropriate to the market that you're competing in right now, as opposed to it was maybe 6 months ago or maybe 12 months ago overall. The average agent has 33 homes for sale. That's 16% higher than a year ago, and above the long-run average of 25. So there's 16% more. More supply means more sellers, because there's obviously more properties on the market, so there's more sellers, most of whom are actually buyers. So they're motivated to move by a range of reasons. Many would-be movers are actually upsizers who are looking further afield to get a home and features that they are actually looking for, while also seeking value for money. After all, budgets are now tight. You know, this 180 billion that was sloshing about in people's household budgets since COVID has now disappeared and been absorbed into house prices as they've risen, and mortgage costs have these risen by 60% since 2021 itself. So Zoopla then goes on to say 1 in 10 homes for sale are formerly a rented home. So 10% of the stock actually coming on are now rented properties. There seems to be a movement out of the buy-to-let market and a reduction in the supply, which means potentially that rents will continue to go up as supply is reduced overall because less people are being attracted into the market by the draconian policies laid down by the Scottish Government and almost soon to be the actual UK government as well. They seem to be making noises already about rent controls. We know these don't work. They've not worked in Scotland. They've just increased homelessness and they've just restricted supply as a result. And they've just left the Scottish Government in an awkward position where they're needing to revise their policy overall and look at that again. So maybe learn that lesson, UK Government. Although I doubt they probably will. Okay, so over 1 in 10 properties, which is 12% homes for sale, were previously rented. A proportion that is held broadly steady over the last 3 years. Tax changes introduced in 2016 greatly regulated the rented property and higher mortgage rates that have led to landlords selling overall. Now, not all of these homes are sold to home buyers and actually leave rented markets. Zoopla says they actually find 40% remain in the rental sector. They're possibly bought by new landlords and let out by the current landlord who decides not to sell themselves. So sales agreed are actually up 16% year on year. And as I said before about the oversupply in the market, that's one to watch out for in the coming months, in the next second half, it's which we're in of 2024, and the first half as we go into 2025 itself. So there's a great supply of homes for sale. More of the bias has resulted in the number of sales being agreed is 60% higher than a year ago. And a long run index of weekly sales shows how sales in the first half of 2024 have been stronger than that in 2023 and the pre-pandemic years themselves. But again, there's maybe more sales, but there's more supply. Remember that. Now, this is a positive, really, and it reveals a more balanced housing market with sales volumes increasing, but with greater stability and price inflation. Sales are up across all regions and of the country and the countries in the of the UK itself. So let's have a wee look at the graph which will accompany this to let you have an insight into it. So this is the graph itself. So this is July 2017, sales agreed are running 22% above the pre-pandemic level. So there's the average, the dotted line that runs right through there. So there's the average. And then, you know, the number of sales are actually quite low in comparison on the index, as opposed to the other months itself or the average itself. So they seem to be a lot lower. And then they come into pandemic, we come into the pandemic, and then sales hit the roof. And that's obviously why the restriction in supply and then the prices go up as a natural result of it. But again, begin to stabilise and keep round about the average overall in the pre-pandemic levels itself. I mean, buyers are paying a greater percentage of their asking price overall. That's the thing we've got to bear in mind. They're actually what it means is, well, buyers are really paying a great proportion of their asking price than they were last year when higher mortgage rates hit demand overall. UK buyers are currently paying about 96.8%. Now, remember, this takes into account England itself. They all start at the top and work their way back because they've got no home reports. We all start at the bottom and try to push up in Scotland as a result because we have a home report based on historic information, which is possibly out of date. And it was especially out of date when it came to the boom market itself. So the fact that we had home reports in Scotland actually masked or it helped actually subdue the huge price rises overall in that market because the home reports curtailed that overall. So, UK buyers are currently paying at 96.8% as asking price, up from 95.4% last November. This is on a par with long run average of the points to continue for house price inflation, and the value in value terms, the average of 16,600 below the asking price for sales agreed in June of 2024, compared to 23,000 below the asking price in October 2023. So higher mortgage rates have hit demand and buying power hardest in the southern England itself, where prices have posted larger falls, but buyers are paying less than 95% asking price last year. But this has actually recovered to 96.3% this year. So the impact of higher mortgage rates then was less pronounced across the rest of the UK, which explains why the proportion of asking price achieved declined by a smaller amount and has stabilised at 97.1%. So here's the graph of the discount to asking price and how it narrows overall in itself. And we'll be rounding up quite soon. And so here we are right here, if we look at this. Now, this graph explains to us, and here, the discount to asking price narrows for sales. Now, this is London, the black line here. So the discount in London in December 2018 was really, there's a heavily discounted in the London market. But then it started to go up when we came into the pandemic, and it again went up again. But it's dropped again to 2018 levels again. But then it's recovered back up to the 2018. I mean, the beginning of 2018, and also the 2019 levels. But you can see how the rest of the UK is actually faring a bit better in terms of 97.1% as opposed to 96.3% in the London area itself. The outlook for the second half of 2024. So what are Zoopla saying? Well, Zoopla expects a continued modest growth in the house prices, which will be a greater outside the south of England, where affordability is less of a constraint on price inflation itself. Sales remain on track for 1.1 million in 2024, which is really good because it's the health of the housing market is based on the transactional numbers, not necessarily the house prices. And because it's a lot, 10%, it could be 10% more than what it was last year, but it's still 10% lower than the average of the last 20 years. So it's still got a wee bit to go up. Now, why do I say that? Because when you buy a house, you'll get a contractor in to do kitchens, bathrooms, joinery, carpets, painting and decorating, roof repairs, everything you do when you buy a new house. And if transactional numbers are healthy, therefore there's more contractors getting used, there's more small businesses getting a bonus there as well. And that, by nature, keeps employment at the correct levels, where we're almost in a full employment economy. It's at 4.2% unemployment. Now, 4% and 6% unemployment levels are classed in economic terms as full employment, because it's expected that 4% of people will be looking for other jobs and potentially just turning over naturally, and also possibly retraining for the jobs that are there already in the marketplace itself. Now, Zoopla then go on to say the timing of the base rate cut is important, and we've just had that there. So that's really good. It's dropped from 5.25 to 5% base rates. And we can see that flow through in the current mortgage rates coming through right now. There's a couple of points, 0.2% reduction on some mortgage rates. And some lenders are actually getting really competitive and almost they're fighting it out against each other to try and attract investors or mortgage holders, really. That's what it is. I mean, you're basically investing by taking the mortgage out in them because they're giving you the money and they've got money available to lend. Hence the reason why they've got more competitive mortgage rates, because they need to lend to stay in business. So when there's not many mortgages getting taken out, they have to adapt and change and actually be more competitive in their mortgage rates in order to attract people to take out a mortgage with them, in order to get their money out and working for them overall, because they work on a fractional lending basis. So if you give them £1, they then go and lend out £10 worth of money. They lend out 10 times what you give them when you save with them. And that's how fractional lending works with banks. So nothing in the King's Speech really, Zoopla went to say, and or the new government's plans has any material impact on the outlook for the housing market in the next 12 to 18 months. Economic growth and increasing home building will actually benefit home buyers and renters in the long run because more supply will mean the housing market stabilizes as more supply comes in because there's more choice for people, therefore less boom market house prices. Plus the fact if you start to build social housing and council housing especially, then it actually brings in more supply into the private rented sector to compete with them, and therefore houses will start rent rises will start to stabilise and level off as well. It's common practice when a housing boom comes along that straight after the back of it, then you get a rental boom as well, because clearly the value of the property has actually gone up for the renters, for the landlords in particular, and their objective is then is like, do I sell? Because the rate of return isn't as good as what it was before. And if I sell, I could probably get a better rate of return anyway just by selling right now. So that's why rents tend to go up to equalise that what it was before, percentage wise, in order to keep the same amount of return on investment. Now, economic growth and increasing house builders, as I said, with the home buyers and the renters in the long run. However, affordability and access to home ownership and rented housing mean challenges for a significant proportion of households on lower incomes. We have seen the banks get extremely competitive right now, and actually, they're now touting 40-year mortgages. Yep. They have to do that because it brings the monthly cost down to more people. Therefore, it's more affordable for them to buy, and it still stimulates the housing market, but it gets them lending out in the economy again. You'll pay a lot more than a 25-year mortgage because obviously capital's getting paid off quicker in 25 years than it is in 40 years. So you'll pay a lot more for getting a 40-year mortgage. But the 40-year mortgage is technically only used as a mechanism to get your foot in the housing ladder to secure your place. And then you can trade like for like and trade up and down from there. As your income increases, you can start to eat into that by paying 10% off your mortgage, up to 10% off every year without any penalties as a result. So that's the strategy you possibly might be considering or taking for that reason. So that's where they are in terms of the second half of 2024. And let's just finish off by looking at the house price index on the country by regional areas in Scotland, northeast, down to London, over to Wales, and up to Northern Ireland itself. So here we go and finalise with this final graph. So right across the regions, as you can see, I'll zoom in on that quite a bit to let you see a bit more. You can see, according to Zoopla, house prices in Scotland year on year have gone up 1.4% year on year in Scotland. If you look in Northern Ireland, that's the highest at 3.9%. If you go into northeast of England, 1.3%, northwest 1.5%, Yorkshire and Humberside 0.6%. West Midlands and Wales are doing well, positive as well. But you can see in the East Midlands, East England, into London particularly, the southeast and the southwest, they are negative, but it's not double digits. It's not even single digits for some of them. For example, London's minus 0.3%. So this gives us a really good insight into the accuracy of the housing market right now overall, in order to give you some confidence as a buyer and particularly a seller as well, as we've got a stable market overall. But my advice is go soon rather than later if you're selling, because we're now coming into a period where the schools go back in Scotland in the next couple of weeks. People start to focus on moving house again, and then in the run up to Christmas, that's when it slows down again because they start to focus on getting ready for Christmas. Yeah, sorry to mention the C word. And then people start focusing on again in New Year. But watch out for the Boxing Day bounce. Boom. That's when more people than ever before actually hit the market and they start looking for property to come into the new year. So that's the one to capitalise on well as well if you are thinking about. If you're thinking about selling in the early new year, you want to get there before the Boxing Day bounce because everybody else is doing that next year. So you've got a huge oversupply. You've got competing against everybody else. And then if you put it on just before Christmas, you catch the Boxing Day bounce. Nobody else is really doing it, but you still got the buyers out there. And that's where you get a huge advantage because you're the only kid on the block. Well, not really, but you know what I mean. Okay, let's finalise by actually seeing price region area. So let's see the prices by region, overall average prices according to Zoopla. So you can see there in Belfast, I mean, according to Zoopla, United Kingdom, 265,000. The 20 city composite is 305,000 on average, so it has gone up as well. Belfast, 175, Manchester, 225, Liverpool, 195, Glasgow, 148, well, 149. Sheffield, 172, Birmingham, 210,000. Cardiff, 255, Newcastle, 155, Edinburgh, 273, Leeds, 209, Nottingham, 202. Nottingham's actually gone up year on year 2.5%. So is Edinburgh 2.8%, Newcastle 2.6, Cardiff 1.8, Birmingham 2.5. And then you go into Southampton 258,000, Bristol 338,000. That's up 1%. London, you can see, dropped 0.1% to 5. Who can afford £536,000 to buy a house on? And that's just average. That's astronomical. And then when you think about Fife itself, Fife itself is round about 170,000. It's a fraction. It's less than a third of what London is to buy. So it just shows you how affordable it is to live in Fife, and some of these areas right across the country, like Newcastle and Belfast and that. Okay, so then we're getting after London. We're in Oxford at 450, Cambridge 468, Leicester 225, Bournemouth 332, Portsmouth 279, Aberdeen 137. Aberdeen, still a perfectly affordable market and a great price point. You'd really have to look at timing about, is the Aberdeen market going to recover? Is there going to be a significant investment over the years? So, we know some people have a real good strategy to play the long game for Aberdeen. They're buying way below market values, what it was in the boom period when the oil industry was booming. So they're paying significantly lower now. They're buying property at a significantly lower level, and they're hoping that renewables will be a huge investment in that sector overall, and the boom time will arrive and appear again, which I think will probably happen eventually. But it's how long you're prepared to wait. That's all it comes down to. Hopefully, it's given you a great insight into where the housing market, according to Zoopla, is right now, and real-time information, real-time data they've got, and the expectation that they expect house prices overall, right throughout the UK, to increase by 2% by the end of the year. If you've got any questions, please feel free to reach out. And until next time, guys, I'm Jim Parker for Fife Properties TV.